Good afternoon, and thanks for joining us for today's ethics webinar. It's one in our annual calendar that we very much look forward to presenting, so we're glad you're joining us today. My name is Michael Hoffner. I'm managing partner at McKonly Asbury, and I am joining Janice Snyder, partner and our director of assurance services for today's webinar. You may notice on your screen we do have a different look than past webinars if you've joined us before. I'm really excited as our firm celebrates our 50th anniversary this year to introduce a refreshed brand for the firm as we look at the history of where we've come from and the 50 years that we're celebrating, and even more importantly, the years in front of us. We've chosen to come to market with a refreshed and a clean look, and so you who are joining this webinar have the joy and the pleasure of being some of the first to see this new look for our firm. So really excited to roll that out, and more to come from our firm. So keep an eye out for that. Our firm, McKonly Asbury, is an accounting and business advisory services firm with offices located in Camp Hill, Lancaster, and Bloomsburg, Pennsylvania. We provide a wide range of services, as you can see on your screen, to a wide range of industries. And certainly there's a lot of depth behind just what you can see on your screen. And I would invite you to go to our website and just see what else we have to offer beyond just what may be apparent on the screen in front of you. So welcome back. If this is your first webinar, please know that we have monthly webinars in a series featuring a variety of topics that'll keep you updated on what's going on around us and in various industries and practice areas. So be sure to check out our website, catch our past presentations, as well as current information of what's coming up through our blog. So with that, Janice, I'm going to turn it over to you for maybe the most exciting part of that day, and that is how to get CPE.
That's great. Thanks, Mike. I'm Janice Snyder. I'm glad you're all with us today, and I am a partner here at the firm. If you have any questions for us during today's presentations, please submit them through the built-in questions function in the webinar control panel, and we will do our best to answer them during or after the webinar. We do want this to be interactive, but you are going to see we're going to spend a few minutes on the code and wrap up with the G process. But we're giving a few minutes here. There were a few individuals having trouble accessing the webinar, but we want to make sure that they can answer our first of 4 polling questions. And we are about to launch that as I move us forward. Do you wish to receive CPE for attending today's webinar? If you do, you need to answer this question. As I said, this is the first of 4 polling questions. And I'm going to be silent for about 10 or 15 seconds here so you know to answer this. We did just get word that we believe everyone made it onto the webinar, so yay, that is a good thing. So please answer this question. We do have several hundred people on the webinar. I know, Mike, I would love to say everyone loves our webinars, which I'm looking forward. This is like the 10th year in a row. It is an annual thing. It's very exciting. Mike may not be as excited as I am.
We are presuming that the answer to this webinar question is going to be yes, because it's a reporting year. So we're grateful that you all have decided to join us. Oh, there are 2% of our attendees who are not interested in CPE, which frankly is shocking. I would love to understand why you're here, other than just to hear Janice and I. And Janice, just to point out, I was counting, you didn't even make it 10 seconds.
Sorry, I tried to make it 10 seconds.
The silence is
important. We'll try to give that 10 seconds of silence so we get all of your attention and nobody misses these all important polls. But hey, Mike, that means there are 5 or 6 people that truly just want to hear all about these case studies, which I think they're going to be pretty exciting. They're things we're actually seeing and things that we've seen happen in organizations. So let's move forward. So our themes for today, you need that CPE. So we're going to touch base briefly. We have a few slides on the code of professional conduct. We need to do that so you get that CPE. We're going to spend the majority of our time walking through 6 case studies. So hopefully that is the slightly entertaining part as you hear Mike and I banter about those. Mike's going to wrap us up with the Joint Ethics Enforcement Program and some words of wisdom at the end of things that you can think about. And anything else you think we're going to cover today, Mike? Anything you want to add to that?
I will be pleased if we get through all of that, Janice.
All right, sounds good. So the stuff we've got to say. So, this conceptual framework, it's been around. They wrote it in 2013, 2014. It's been effective since 2015. kind of covered it ad nauseum if you've been with us over the last 10 years. But it has 3 parts. It's broken down for those members in public practice, like Mike and I and several people on the webinar. There's probably 100 people in public practice on this webinar and 200 that are members in business. So we're going to be talking to you as well. And there's probably a handful of you out there that are other members, retired or unemployed, or just trying to keep those licenses active. So it's broken down into those 3 parts. It is a conceptual framework. We'll highlight what that is. It's organized intuitively. It separates it by line of business and then by topic. The topics are broken into subtopics. You can all read that. We're not going through that. Thank goodness. We have done entire webinars on threats, and we've done entire webinars on what the safeguards are. We're going to touch on them really high level today on what that framework is. So under this approach, the users go through and they say, do I have a threat to this code of professional conduct? So is there an ethical threat? That is the first question that you should ask. Then you have to evaluate the significance of those threats. So there are 7 threats, cliffhanger there. We'll tell you what they are. And then you can apply some of the safeguards. And those safeguards fall into 3 different categories to see if you can eliminate that threat. So I know you're all waiting to see what these threats are. So here they are. So the 7 threats are, do you have an adverse interest in what's going on? So is there a reason that you may make a decision or act in a way that would be contrary to a way you should behave in line with the profession? Advocacy. I know they talk a lot about that, like if you're too close to the owners of the business, or Mike and I in public accounting, would we advocate too strongly on behalf of our clients? Is there a reason that we would do that? Is there a familiarity threat? Are you serving or working closely with someone that might be a family member, or someone that you were too close with, or someone that you grew up with, or that you really just want too much to help, too much that you're gonna maybe bend these rules? As someone in public accounting, could we be participating too much in management decisions? So are we actually acting as management? We have to make sure that we don't cross that line. Is there a self-interest threat? I always think of this one when, CFOs and individuals in an organization could be making decisions or booking entries and things like that, that, you're booking something that could lead to a bonus accrual, or that could lead to hitting some threshold, and there could be a self-interest threat. I always look at self-review threat. So who is reviewing these financial statements? Who's reviewing this reconciliation? Is someone reviewing something that they could benefit from? And then, is there undue influence? Is someone in management being given a lot of pressure by a board of directors? I think of that in nonprofits, or by an owner, or by an attorney, or something else. So anything like that. But Mike, anything you want to add? We did an entire hour-long webinar on these 7 threats. So, and I covered them in 1 minute.
that archive can be found and is, I'm sure, still available. And the beauty of where we've come from since 2014 is they have not changed the code of conduct. And the code prior to 2014, as we've talked about at length for the last 7 years of webinars, wasn't quite as easy to follow. So I would invite Janice, anybody who has that burning desire to get into the kind of detail that you just opened the door for, to go back and we can, and if you need to send us a message, we can send you directly to where that archive might be hidden. But it's all out there in excruciating detail for anybody who's interested.
Yeah, it might have been 2018, 2019, but we could certainly find it, Mike. But we gave many examples of each one of these for anyone who has that interest. So, but for today's webinar, this is not the focus. So we're going to move on. If I can get the slides to advance. There we go. So here is the conceptual framework, the threats and safeguards approach. So as I said, first step, identify the threat. If you have none of those 7 threats, you get to move on. Second step, you evaluate that threat. So you have to say, does this threat exist? Do I have a self-interest here? Do I have an advocacy threat? Will I benefit from this decision? Is there a self-review threat? Is there something that is happening here? If those threats are acceptable and you can say, no, that's not influencing my decision or how I'm behaving. There's not undue influence. I don't feel threatened. I don't feel that somebody's coming down too hard on me. Then I'm going to proceed because this is not impairing my judgment. This is not impairing my ethical decision making. I'm so confident that I'm doing the right thing. The third step then, if you think there is a threat, then you have to say, is there a safeguard in place that I know someone else is checking this, looking at this? So there are 3 types of safeguards that could be in place. And those safeguards that I think a lot of that, if you're a member in business or a retired or other member, you're going to rely on those safeguards that are put in place by the profession, legislation, or regulation. So some of those safeguards are, I attend the ethics trainings and I do what I'm supposed to, and I am knowledgeable and I understand what I'm supposed to do, and I have all my CPE and I'm a licensed CPA and I stay on top of these things and I understand the regulations and I'm doing the right thing and I feel confident in that. So that could be one thing. Maybe that alone is not enough. But you could also look to, we can look to, do our clients have good safeguards or controls? So if you're in business, does the organization have good checks and balances and reviews in place? This entry or meeting this earnings target, yes, this is going to benefit many people with a large bonus, but there's 3 other levels of review that this is going through, and I alone am not making this decision. And there are good checks and balances in place here in my organization. And then for those in public accounting, the firm can also have safeguards in place. And I'm not going to go through all of those here, but we certainly have those in place. So if the remaining threat level is acceptable, if you have appropriate safeguards in place, then you can proceed. And if you do not, then you need to stop and the threat is unacceptable. And through all of this, the key is to document your decision-making process, and that's what will protect you.
And just 2 comments on that, Janice. I think a lot of us have heard the phrase, locks are to keep honest people honest, right? Someone who's dishonest, the lock is irrelevant. And so a little bit of this idea of safeguards and policies and having those checks and balances, sometimes we step back, and we'll talk a little bit about this, I think, as we go through some of the case studies, but having those policies, sometimes we roll our eyes and say, well, that's obvious. Why would we have that? Why would we need that? There's no way we're going to do X, Y, or Z without having a good conversation and making sure we're doing the right thing. But reality is, having significant safeguards in place will protect the people who are making the decisions, even if it seems obvious. You give them a framework. And then just the second thought is, as you're going through some of this, and yes, there is a webinar on safeguards. We can go back to that if we really wanted to. But sometimes when we document things too clearly, what we're trying to do is find the loophole, right? And so that's something I want to make sure that we touch on a little bit is, we know that in an ethical framework, we could find a way to justify doing something that at a gut level we feel like is not right and we know is not right. And so that's part of this whole process in evaluating threats and safeguards, is really challenging yourself from an ethical perspective. Am I justifying something because I can find something in the code, or I can find something in my framework that says, okay, it's gray enough, I can do it? And then how do we put those safeguards in place to make sure we're not dancing into that gray area? So just a couple things that came to mind as you were going through that.
I often think, like, if I'm going to need more than 2 or 3 sentences, or if I'm going to be like, wait, let me tell you, and I need this lengthy explanation, it's not good. Like, you already know that. If it needs a 10 or 20 minute explanation, it's already not good. You're going too far. So. All right, we are all ready, which is good because we want the majority of this to be our case study. So we're already at our polling question number 2. So as defined by the AICPA Code of Conduct, I would classify myself in which of these categories? So we're going to learn a little bit about you, see if my guesses earlier were correct. I'm trying really hard here, Mike, to be
You
quiet
did,
for the
you
10
did
seconds. I was
I think
counting.
that was enough uncomfortable silence to get everyone's attention. So just a few more seconds as you finish up the polling question here. And as Janice said, it's just helpful for us to understand who the audience is as we get ready to launch into a little further discussion on some case studies and then some ethics and enforcement.
Great, there we go. A lot of public practice, so a little more than I guess. I thought about a third with 2/3 in business, so, and a few falling in the other category. So, well, there might be some government on here as well. So I wasn't thinking about that with the other category. So there we go, Mike. So, and we are launching into the majority of our webinar here as we head into our case study. So, Mike, you have the first one. I think this is a fun one. I'm excited about this one.
Well, and I'm sure there's a lot we could say on here that we shouldn't dig into on today's webinar. So no, before we get into the first case study, I want to connect the dots. We spent the first 10 minutes here talking about ethical framework and what the code says, and the next 30 to 40 minutes is really going to be on these case studies. And at times, I think some of you will step back and say, all right, walk me through how exactly this ties to the AICPA's Code of Professional Conduct, and which of these things that you mentioned on the front half are going to be relative on or relevant on now this part. And I would say it's not always going to be a simple one-to-one. Our goal here for the next chunk of time is really to talk from a conceptual standpoint about how to think through things. We'll make some reference to the Code of Conduct. We'll make some reference to the particular threats that we've talked about. But for the most part, we just want to talk about how to think through some timely and relevant things that are facing you, whether you're in public practice, in business, or in the other category. And so I would invite you, just as you go through this, think a little bit about that framework, but it's not a linear one-to-one connection. We're just going to talk theoretically about how to think through some of these things. So yes, let's talk about the employee retention credits. And this is not, let's be extraordinarily clear, this is not a webinar to explain ERC and to talk about what qualifies and what doesn't qualify, and to talk about what the IRS's current status is on moratoriums and what are they going to do and what's going to get declined and what are they going to do about all these ERS or ERC promoters. We're not going to talk about that today. We're going to talk about how to think through, if you're sitting in the seat of a board member at an organization who is looking at an ERC opportunity, or you are in an accounting department or a business owner thinking through, should I, shouldn't I, what do I need to think about? There is a significant ethical framework around, or ethical implications of this. And so let's talk about what you've been hearing and what you've been seeing. The last year and a half, a whole new industry has risen up around ERC. They're called, the IRS has referred to them as ERC mills. They've popped up and they are aggressive. You hear ads on the radio, ads on TV, ads on shows that are expensive to buy ads on. And I can tell you, and you know, if a company is buying an advertising space on an extraordinarily popular show, they're spending a lot for it. What does that tell you? It tells you they're making a lot of money on what they're doing here. So there's a reason they're out there in the public space. There are emails targeted, as it says on the screen in front of you, 10 targeted emails a day. I get them that say, as an accounting firm, we qualify and we should be looking at this. And what that tells me simply is that there's no research behind who they're sending it to. They're sending it to everybody in the hopes that one or two will stick. The phone is ringing. We know you qualify, but how do those phone calls and emails start? They don't start with the question that a reputable advisor would ask. A reputable advisor would say, have you worked through this, and do you understand your opportunities for this, or at least understood that you don't qualify, but have you turned over all the rocks? No, these messages are coming with a very straightforward, we've looked at your profile, you qualify, let's get started. Let's get you those millions of dollars. And so you have this constant barrage of information that is supplemented, and I know this happens because I've heard stories of this happening, and we've had clients who have reached out because this has happened. We're told we don't qualify. We've gone through and looked at it, and we know we don't qualify, but I'm on the golf course, and another CEO or another business owner is telling me that they qualified and they got a $3.5 million check, and their circumstances have got to be the same as ours. And so how do we not qualify? Well, somebody else, another expert, is calling me and telling me that I qualify. So there's this constant barrage coming at us of you qualify, other people qualify with similar circumstances. So what do? How do we sit back and think about, particularly in the cases that are not black and white? And let's be clear, again, not an ERC webinar. Sometimes it's black and white and very clear, you qualify. But in many cases, particularly with adjustments and clarity in the legislation, in many cases, there's a lot of gray that surrounds supply chain and the definition of a government order and how deep that goes, and segmentation of a business and things that have occurred over the last few years. So it is gray. So how do we step back and think about, should I or shouldn't I? And Janice, what's your if we were to do a polling question right now that said, if I were not entitled to the ERC, would I take it? How many of our audience do you think would say, well, no, of course I wouldn't take it if I'm not entitled?
I would hope all of them.
All of them, right? So we are an ethical people group. We are, let's go on that assumption that we are an ethical people group, right? So we will all say that I absolutely won't take it. I know folks, I know business owners who have said on principle, I will not take the credit because I don't like how the government is handing out money. And I know others who would counter that with, I don't like it, but I do qualify, and if I don't take it, I'm now at a competitive disadvantage. So again, all these thoughts going through your mind that are being now peppered with a third party saying, we're experts and we know that you qualify. So how do you think through it? It's not a question of, if I don't qualify, I won't take it. I think we all know how we'd answer that. The question is, and the things to think about from an ethical framework is, how far will I go to make certain that I'm doing the right thing? So I hear the expert telling me, and I'm not on video for you, but I'm doing air quotes, the quote unquote expert who says, you absolutely qualify and here's why. But in the back of your mind, you're a little bit doubtful. You know, there's a little bit of a question on whether that's really applicable, but the expert says it is. So think through that process. What safeguards could you have in place with this kind of an activity? Are you involving your board in the discussion? Are you stepping back and being willing to write a check to an attorney to dig in and write a legal opinion on what the expert is telling you? Are you willing to engage a second consultant, an accounting firm, another competing promoter? Are you willing to invest the dollars to make sure that what might sound too good to be true, is it actually true? Are you confident in the motive of the organization that solicited your business? So there's the frameworks, again, it doesn't necessarily tie one-to-one to this threats and safeguards mindset. But if you think about the threat of, I want to do what's right for my organization, I have this self-interest in getting it right, I want to not miss an opportunity to put my company in a great financial position for the future, what safeguards are in place to make sure that the expert you're listening to in this case, where we all know there is a significant amount of gray, that the expert is doing the right thing and putting you the right way? And finally, we have this self-preservation mindset, right? If you're sitting in a controller's seat and the business owner is hearing from his or her friends out in the marketplace that they have a similar situation and they got it, and they're looking at you saying, why are we not getting it? Are you confident in your ability to stand up against that pressure when you know what is right? So there's all these things that go into what is an extraordinarily simple question of, do you qualify? You should take it. If you don't qualify, you won't. But how far are we willing to go to get there? And have we thought through, when these kinds of opportunities come up, what we will do to make sure that we are doing the right thing as an organization, as an individual? So Janice, that's all I got, because that's a lot of rambling on this topic, but I know you want to weigh in on this one as well.
Yeah, I mean, you definitely mentioned the self-interest there. I mean, I don't want any organization that legitimately qualifies and is confident that they qualify and meet the criteria and has an expert telling them that and got a second opinion, because you want to be confident in this, that you're not doing something wrong. I mean, I want them to get their ERC credit. I mean, that's a given. But you also want to watch the other threat of undue influence. Like if that business owner, or you're the CFO, or you've got individuals coming down on you, like all these other people got it. But a lot of organizations, when they're signing those engagement letters with the third party or the expert that's coming to them, that is getting a very large percentage of that credit as part of their payment in many cases, when you see some of those engagement letters and how they work, they're putting all the liability back on management and the company is certifying that they qualify, and the organization is taking all of that risk. And you want to make sure that you are confident that you understand what those experts did, and that you've gotten that second opinion, and that you are confident in that, so that ethically you can make sure you're following this code of conduct and you're following those rules, and you can be confident in that decision. So.
And we're going to talk at the very end about enforcement, and I will save my last comment on this one for that venue.
Yeah, so I definitely know some organizations that filed for the credit, and my stomach just sunk, that I was like, oh no, like I hope they did the right thing, but on the surface it may not have looked like they qualified. So I hope that their experts were honest and forthright and ethical, and that it was the right thing. But I just don't like it when I feel that way, that there's doubt in my mind. So hopefully that all turns out well.
And I absolutely believe there are organizations that you might step back and look at on the surface and say, I don't understand how they would qualify, that absolutely qualify. The standard, the regulations are complex. So the question is, how far do we go to make sure it's being interpreted correctly, when we know for a fact that there are organizations that are out there churning because they get their handsome fee, and in 3 or 4 years, if this comes back to haunt you, they're long gone. And so what are we doing to make sure we're getting the right answer? Because it's not as simple as it might look on the surface.
Mm-hmm. Yeah. So yeah, a lot of organizations, they've probably done the right thing, and hopefully worked with firms that have been around for a long time and will continue to be around for a long time. And it's not one of the pop-up firms and someone that won't be around to defend that position, and the ones that have helped you. So, but yeah, definitely a timely, relevant, but a really good ethics case study. So, all right, I'm going to move on to the next one.
On to the next.
On to the next. All right, so here's a payments one that I've seen within the last 2 years. So this may be, it's an interesting one. It is something that's happened. It's something that's timely, and this is a little more around controls or conflict of interest. Tying it back to the threats, I mean, maybe that's a little bit more of a stretch, but let's talk about, this was a vendor contacts an accounts payable employee, and it says to update the payment information in their system. So ultimately what happens is the individual says, okay, this seems legitimate. It looks like it came from the person that I know. They update the AP information, and they go and they pay the next invoice, which happened to be hundreds of thousands of dollars. This was a pretty large company. The money goes out the door. It ends up going to a fraudulent bank account. I mean, it was a real bank account, but it was to the fraudster. The employee did what they would normally do. However, the controller, that position was vacant, and the controller would normally be a second check on that. But since that position was empty at the time, the accounts payable individual had the ability to update this information in the system and went ahead and did that. So there's a couple of things to think about here. So the accounts payable employee went ahead and updated the information only because that position was vacant, and they had the authority to make that change in the system. Now, I don't believe that employee from an ethics standpoint, thought this came from my trusted contact. I don't think they believed they were doing anything wrong. I mean, it was clearly the information they were receiving was fraudulent, But they didn't know that. This is more, segregation of duties, conflict of interest. So the employee was acting in good faith. Now, obviously what was coming in was flat out fraud. I mean, it goes way beyond being unethical. But then you step back and say, like, should the accounts payable employee have had the ability to change that? Like, you're kind of putting that employee at risk in a compromising position. And sometimes we don't look at controls. Yes, they can be kind of a pain and they add extra layers, but you're actually putting that employee, no employee wants to make a mistake like that. Not that I'm saying that like they made a mistake by having money go out to the wrong person, but a mistake was made and the money and the organization lost hundreds of thousands of dollars for this payment. And now you have an accounts payable individual that made that change. So a control in place in that check and balance would have certainly protected that employee. And I don't know that we always look at controls because they're challenging. They add time, they add effort as protecting an employee. The accounts payable employee also could have called their contact at the vendor, so they could have done that as well, but normally the controller would have done that. So there's a couple of different places here. I didn't necessarily see this go through the framework. You can think about segregation of duties. You can think about, is it easier not to call the vendor? Would the accounts payable person have thought of that? Is it more difficult for the company to put another layer of approval in place? It really happened because of a vacant position. I don't know. Any thoughts you have on that, Mike? I mean, I really saw this happen, and I think there's a lot of layers to it, and I think it's something that really does happen at our clients, and it's something that easily can happen. So I wanted us all to think about it.
Yeah, I think it's a wonderful case study for strong internal controls and segregation of duties. I think from a ethics perspective, it really is, it forces us to think about that question of, have we put the correct safeguards in place at our organization so that anything could be avoided similar to this situation, right? So in this case, it was a segregation of duties issue. We had a vacant role that caused too many things to be in one seat on the bus. But let's change the circumstance a little bit and say we've now hired that CFO, but we've left the power to change things in the payable system still concentrated with the one person. Now what happens when we do have an unethical person in that role, or somebody who, we're not going to get into the fraud triangle, we could spend a lot of time on the fraud triangle, but we get into that situation where somebody who has always been reliable and trustworthy and of the highest moral and ethical standards is now put into a situation in their personal life, an extremely ill family member who can't afford the care they need. There are a lot of situations that change that outlook, and now we have an employee who maybe has the ethical framework that we would want, but we've given the opportunity to change the direction of a payment, to change the bank account, to potentially add a vendor fraudulently. And so it really begs that question of, in an organization, whether you are the CFO, the owner, the controller, a staff accountant, or any other position, are we confident that our organization has in place that right framework so that the employee who's struggling with that decision has no choice? They have to follow the right path. So yeah, so Janice and I, we struggled a little bit on this one. It's a great example, but ethics versus internal controls are not one and the same, but I do think this one was very applicable to both.
Yeah, they were not, interestingly enough, in this case, they were able to recover the payment through their insurance because they did have good enough internal controls. So it did turn out to be somewhat of a success story, and positions were filled and better controls were put in place. So there was a good outcome to this. So, but I think it warranted a good discussion. But this leads us to polling question number 3. So my biggest concern that something could go wrong in our company would be from open positions, vacations or leave time, so when people are not there and you might circumvent some of these controls, a lack of segregation of duties, such as in this example, or just not having enough time because you didn't want to pick up the phone and call that vendor or verify that information or verify that change. So make sure you answer that poll, but I think a lot of us could justify any one of these, and a lot of them go hand in hand. I mean, we're all pressured for time. So you have any thoughts on this, Mike, as everyone wraps up this poll?
Yeah, I would add a fifth option to it, but we're going to talk about it in just a second.
All of the above, but or you'll go into next one. Make sure you wrap this up a few more seconds.
Yeah, I do think that idea of not enough time, I expected that to come out pretty highly here, because I think the open position thing is critical, but what does that mean? It means the other two at the bottom. Lack of segregation of duties, because we have to fill those roles that are currently empty. We have to do the functions that need to be completed, but it also means we're trying to do too many things without enough time. And quite honestly, that last one is such a catch-all because it is reality. And the most of the mistakes we make, whether it's clicking on the wrong email or moving something through the system that we shouldn't have, it happens because we're in a hurry to get it done because there's too many other things to do. So it doesn't surprise me that that one came out on top. So, but here's the one that I would have added, which is remote work. And that is our next case study that we're going to talk a little bit about, because I do think there's a lot of question in the environment today of how much risk or how much change might happen in an organization because of this shock we had a few years ago that has made remote work not only acceptable, but almost necessary in entities and industries where it just wasn't here yet. So it is a new reality to most office jobs. Remote's here to stay. It's in one form or another. Doesn't mean that it's fully remote, but there is a sense that most organizations for office jobs, understanding that there are a lot of jobs that are absolutely necessary and critical, that you just can't work remote. But there are a lot of jobs where remote worked fine. We transitioned really well in 2020, and we never came back because we didn't really need to for those roles. So most organizations have some form of a remote work environment that allows that flexibility. It avoids a one-size-fits-all approach to the policies, and it ensures that they can attract and retain people, right? We just talked about open positions and not enough time. So how do we keep people? Well, I enable them to work an environment that is more comfortable and may keep them in my organization and keep them engaged. But as this case study notes, we don't always get the same production. We don't always get the same results. And I'll call it the old school employer, right? Maybe that's not the right way to say it, but the old school employer may revert to what I would say is the easiest answer, which is it wasn't like this when everyone was in the office. So it must be that they can't work remotely. They're taking advantage of us. They're out for themselves. They just want their cushy work environment where they get to be at home. What's best for them, right? That's an old school mentality. And when we sit back and think about this case study, so we have a employee who is working remotely. We have an environment where we've said that's okay, obviously, because this person is. But responsiveness has really started to wane. The work quality is there, but we're starting to see some deadlines missed. We've seen a lot pushed back. So things are not going as well as they did before. So what does this have to do with ethics? Well, it has to do with that initial mindset of, well, clearly they don't have the right approach to things and they don't have a good work ethic and they're taking advantage of the situation. That mindset, well, frankly, it's inappropriate and unnecessary, right? This is the environment we live in. So the question is, first question, does this even matter? I think we would all agree that it does matter. The work is still mostly getting done in an environment where it all needs to get done, and it needs to get done timely, and we need to have good communication. It absolutely matters. So what do we do about it? I would offer a couple of thoughts. And the first thing, if you think through it from an ethical framework, a safeguards, and what are the barriers that keep people from doing what we want them to do? Well, first we have to step back and think about what changed and what didn't change. Remote work is relatively new for most of us, right? And I say relatively new. We're now 3 years into this environment, but that's still relatively new when a lot of our organizational history and culture and processes and communication and how we set expectations, it did not evolve as quickly as the work environment evolved. So I think the first question I would ask is this an employee problem or is this an employer problem? And if it's an employer problem, then we step back and think through what clarity have I given our team in this environment? So we need to think about things like, what are we communicating in terms of expectations? So when somebody was sitting here in the office every day, and I as an old school employer could walk out and say, hey, how's it going? Where is this? Hey, I have a quick question for you. It's very different from that individual working remotely or on the road, or maybe they moved during the COVID times and have figured out how to work fully virtual. Have I changed how I approach that individual in terms of setting expectations? Because is it an ethical issue with an employee who's not doing what they should do at the right times of day if I haven't told them what they should do and what time of day they need to do it, right? So very important, I think, for us to think through that context of what have we changed, not just what's changed in them. And I think that is a pretty natural initial thought. We also have to stop and think from a human resources perspective, what else could be going on? And when somebody's sitting here in the office every day, and there is the water cooler talk, and there's the conversations just around, what's going on in life, we learn things about what's going on in an employee's life that may make a difference in how they're approaching their workday. And it's a difference we can react to when we know. But from a human resources perspective, we have to be extraordinarily careful of asking anything even remotely like that, right? When it's offered, it's offered. We have to be careful of asking, and I'm not going to I'll let Janice, if you want to get into the HR implications of that, not really the purpose of this webinar, but it's really that understanding that a fall off in productivity or missing deadlines may be tied to something pretty significant going on in that employee's personal life. And how do we gain that understanding and that communication before we judge that this person's just taking advantage of a situation we've provided? But look, let's say worst case. Worst case, we have an employee who is taking advantage of your organization. They're working part-time and taking their full comp because they're getting away with it. They are working 2 fully remote jobs because they're getting away with it, right? I read an article about an IT individual who was working 3 full-time jobs, making 6 figures at each of them because they managed it, and they were burning themselves out doing it and kind of figured out that they could make $350,000, $400,000 for a couple of years, and they'd burn out, but they'd have a lot of money in the bank, and then they'd go back to one job. So let's say worst case we have that. What do we do about it? And the first question I would offer, again, safeguards. Does our employee manual make it clear? Do our policies and procedures make expectations clear? Do our communications lay out what we're proposing and expecting for a particular work environment every single day? Do we have the right policies and procedures? So just a couple things to think through from an ethics perspective. First, avoid making the assumption that the employee is not coming from an ethical perspective. Understand and be willing to talk through what's behind it. Make sure your policies and procedures are clear on expectations. Communications are clear on productivity expectations. Revisit and think about company culture. Are we focused on the things that have changed in an era of remote work? Are we thinking about wellness? Are we thinking about mental health and isolation and the things that could create what we're perceiving as just an employee mailing it in? And lastly, I would say train on ethics and some of the things that people should be thinking about in terms of confidentiality. And we'll get into that in the next case study. But how does a remote work environment open up gray areas? And are we making it clear that those gray areas are different in this new era, and we have to have those safeguards in place, and here's what they are as an organization, and here's how we communicate. So things to think about as you approach this, because I think this is reality for most organizations.
Yep.
Anything to add, Janice?
I just hone in on company policies and procedures. They're going to protect you. They're going to protect the employee. They're going to set that ethical framework and the standards for both of you. And I just think a lot of company policies and procedures aren't where they need to be with how quickly things have evolved. And I know 3 years isn't all that quick, but relative to most of our companies and relative to how detailed and updated some of our handbooks are, I think that's important. That's it. We'll go on to the next one.
Let's move to the next one, which is actually going to be a fairly quick discussion, because I think it's very closely tied to the conversation we just had about remote work. And this is fairly straightforward. At the end of the day, you can control what happens in an office. But when employees are working remotely, whether that is in their home or in a coffee shop or on an airplane or wherever they may be, in a hotel lobby, we lose that ability to control what's going on from a technology perspective. So should you have concerns? I mean, I think the answer there is fairly obvious. Absolutely, you should have concerns. This is a professional ethics webinar for CPAs. Much of the data that CPAs work with is confidential in nature, whether you're in industry or in public practice. It's related to your vendors, your company, your employees, related to your clients, related to various things that we would all say, I should not have someone looking over my shoulder for. So an accidental breach, because we're not taking the right amount of care, I believe is absolutely as damaging and has the potential to be as damaging as an intentional breach. So we got to think about this fact that an ethical framework extends beyond how you decide on the path of what decisions in front of me, right? We always think about that. I could do A, B, or C, and C doesn't feel right from an ethics perspective, so how do I make the decision? Ethics extends to your behavior around protecting the information you have and the seriousness with which you look at that. So absolutely, there should be concerns. When you're working in public spaces, we have to be thinking of, and not we, our entire team, our employees, we need to make sure that everybody understands that if there is a possible viewing of confidential data and we do not take the right safeguards to prevent against the wrong people viewing that data, it is an ethical concern. It is a concern of lack of care. I'm not worried about it. I'm out here working and I'm just not thinking about doing the right things. So what's the difference? And I know we're not going to open this up for people to weigh in, but what's the difference between working on an airplane when the person next to you can see what's on your screen? And let's be honest, most of us, when we see somebody working and we're on the aisle and they're on the other aisle, one row in front of us, we're glancing at the screen to see if it's anything interesting, right? What's the difference between that scenario and working at home with a family member? Over my shoulder, walking by in the background. Is there a difference? I think we would all argue that there's a distinct difference between a viewer who I do know and a viewer who I don't know looking over my shoulder and what they might do with that data. But in reality, is there a difference? People who are not entitled to see the data that we're working on, it's confidential in nature, are looking over our shoulder and able to see confidential information. So how do we resolve that? How do we fix that? Do our policies make it clear what's okay and what's not? And have we trained appropriately? And then last question on the screen there, are there clear recommendations and expectations presented to employees? And more importantly, are remote employees any different? And I would offer the question, should remote employees be treated differently in terms of data security? And I will just offer my opinion and then we'll move on. And Janice, you can counter my opinion. But I would argue, yes, they should absolutely be treated differently. They should be treated more strictly, more training, with an understanding that they're in an environment where they have to be thinking differently than they do in the office. And it has to be tied to ethics and integrity, not because they're making bad choices on decisions they make, but they're making bad judgment or bad choices in how they're protecting the data they've been entrusted with. So it's about situational awareness, and we fix that through training and clear policies and procedures. So Janice, anything to add on that before we move to the next? Because we're running down on time here.
Nope, and I want to get to the next polling question in about 2 minutes. So I got 2 case studies. So the next one, Mike, you touched on a little bit. So I never like to let this one go because this is a real case that it went to court. So this is a fraud case. So no doubt the office manager here committed fraud, stole $6 million, and went to jail. This truly happened. This happened to be an organization that dropped their audit for 6 years, and all this money got stolen. And then once the money got stolen, they brought their audit requirement back. It was amazing. But the interesting thing here in the ethics case study is the role of the CEO. So the CEO was signing blank checks. First of all, that should never happen. It is certainly a behavior that should never occur, but it is also unethical. And they were also approving a list of invoices to be paid that it was convenient for them while signing the blank checks, and then the amount of money that went out of the organization matched that. But there were duplicate payments occurring here. So there were a number of unethical things happening in this, but it was the CEO that was behaving unethically while the office manager was committing fraud. And the unethical behavior of the CEO allowed that to happen. The next one is just on time reporting. And this, again, Mike touched base on company policies and procedures when it comes to remote working, as well as when it comes down to confidentiality. And this comes back to company policies and procedures. It is not okay for you to shift time, move time around. This is not an HR webinar on Fair Labor Standards Act. It's not an HR webinar on exempt versus non-exempt employees and how you should report time. We're not getting into all of that. There are specific laws and rules, but what this is saying is you must follow your company policies. Your policies should be clear. You do not just have the ability because you think it's okay to compress work weeks. Some organizations allow that, but it should be in the open. It should be an ethical practice. It should be something that is permitted if it is in your organization, and things you should not just take the liberty to do. You should be sure you are acting ethically and not just acting in your own self-interest or not just doing the things that you want to do. You should be making sure you are following all of those. Conversely, in an organization, you should make sure your policies and procedures are clear. So they were super quick. You have the slides. We welcome your questions. So probably you're not going to hit that as one of your favorite case studies, but this is our last polling question. The case study that resonated most with me was the employee retention credits. That might have been my favorite. The payments that we talked about, working remotely, technology, or approvals. So let us know which one.
We'll truncate the silence on this one, Janice. A question did come in about whether it makes a difference in getting a cover for their computers so that others cannot see the screen, and that's in reference to working in public places. And I would say absolutely. I have one on my screen. You cannot see what's on my screen unless you are immediately behind me looking over my shoulder. You get more than 5 degrees off of that center point and you can't see it anymore. And I am very comfortable working in public places as long as my back is not directly to somebody. So I just pick a seat accordingly so that nobody can see from the side. I absolutely think having those available for your employees is really important to ensure they have the ability to keep things confidential. So with that, yeah, working remotely.
Working remotely, got it.
I'm not doing all the math or anything, Janice, but I'm just saying that the two
they
that
were
I
your case studies.
So let's talk real quick as we wrap things up here about ethics and enforcement. And we've talked about this in previous webinars. I think it's something that is worth, there's just a couple of quick comments I'll make regarding the Joint Ethics Enforcement Program. So we've talked about this in some level of detail before. We've rolled through exactly how the Ethics Enforcement Program works, but just as a reminder, because virtually every state has either adopted word for word or something very close to the AICPA's Code of Professional Conduct as their state-driven and sponsored code of conduct. In a case where a member of both the AICPA and the state society commits or is accused of committing an ethics violation, the goal here was to try and streamline through one process the enforcement so that both the PICPA and the AICPA would not have to have independent investigations of a member of both bodies for the same event or activity. So that's why it exists. It is governed by an agreement that the AICPA and all the participating states, which is most, have signed onto, and there is a public document. If you want a great night's sleep, search for the Jeep Manual of Procedures and give it a read. You'll make it to page 4 or 5. But it is worth at least understanding how things go. So Janice, can we move to the next slide there? So here's something I mentioned earlier that I would come back to. There are 4 identified items in the Manual of Procedures that skip right past a hearing and an investigation and straight to disciplinary action for a CPA. And I thought it was worth pointing out, and you can see them on your screen there. If you're convicted of an unrelated crime to your profession, but you're going to jail for more than a year, you are probably not a good standard bearer for our profession. So they will take action. Willful failure to file your individual income tax return. So if you just decide I'm a CPA and I'm not going to file my own return, that is an act discreditable and they're kicking you out. Well, they'll move to some disciplinary action. Filing a false or fraudulent income tax return for yourself or a client, or willful aiding in the prep of a false or fraudulent income. So this, let's go back to our employee retention credit discussion. And when you file those amended forms to now take a credit that you know you shouldn't take or aren't really sure you should have taken, then we have this question of, are we even going to get into a hearing, or are our governing bodies going to look at those that followed the lead of the ERC mills and went ahead and did whatever they needed to do to get the cash, and in 5 years the IRS says, nope, that was fraud, you shouldn't have done it? What happens from a disciplinary perspective? It's not going to be terribly gray if it was an obvious yes or no answer. So I just wanted to point that out. And then the last thing we have to cover today, real simple slide on what the outcome of disciplinary activity was. 2021 is the last year I could find the data for. I'm sure 22 was published somewhere, but it's not on the AICPA's website, and so I haven't seen it yet. But just so you have an awareness of how many ethics cases move through the system. So you see they opened just under 400 new cases during the period. They closed just under 500 outstanding cases. So it is not, for the number of CPAs in the country, it is not an obscene amount of ethics cases and disciplinary activity that goes through our system, but it's not insignificant. It's not inconsequential. There are, for a profession that claims to be built on a foundation of integrity and ethics, 400 new cases going through a disciplinary process is 400 too many. So it just goes to, I think, remind us that while we all have the right ideas in mind from an ethics perspective, we always have to slow down. We have to pause. We have to think about the actions we're taking and make sure we give our team and our employees the framework around which they can make the right decisions as well.
All right, Mike, that pretty much wraps it up. And it's 3 o'clock. So we got a couple of final words here, but anything else you want to say?
No, it's always a pleasure. We always have far more to go through than we probably should schedule in one of these webinars, but it's always good to go through. So no, appreciative for you all joining us on today's webinar. I think it's been a good, though very quick discussion. If you have further questions regarding what Janice and I have spoken about today, please feel free to reach out to either one of us. Our contact information is on your screen, and we will be happy to assist. A recording of our webinar will be posted on the website and our social media sites in a few days. And for those who requested CPE and answered all the polling questions or have reached out on the one they were unable to, your certificates will be sent out in the next few weeks. So we appreciate you joining us. Hope you have a wonderful rest of your day. And again, ask that you take a look at our upcoming events and think about what may be applicable to you, and join us for a construction accounting and tax planning webinar coming up on November 16th. And then on December 14th, a year-end tax planning webinar with partner and our Director of Tax Services, Mark Heath. So thank you and have a wonderful day.
All right, thanks everyone. Bye.